BoC and OPEC Plus meeting. The week will start with the holiday in the United States and will end with its non-farm payroll numbers on Friday. On the other hand, while the conflict between Ukraine and Russia increasing the market risk and energy prices, OPEC and its allies members called OPEC Plus will get together on Wednesday and Thursday. Also, the Bank of Canada on the first day of June will start the June banking rallies to increase the interest rates. We also have many others to watch in the week ahead, so stay with me to review the most important events and data. Number 1. Chinese PMIs. Busy Tuesday will start with Chinese PMI data. These numbers will be the most up-to-date data about the Chinese economy and how they are confronted with the latest challenges. In April and then in May, China had some COVID lockdowns in Shanghai and other country areas, and these numbers should tell us more about the effects. Estimates are about to see both service and manufacturing indexes under 50 level, signaling contraction. These numbers should decrease the GDP numbers and put more pressure on yuan. Number 2. European CPI. After 7.4% in April, we expect to see European inflation at about 7.7% in May. We expect these inflation trends to push the European Central Bank to begin raising interest rates in July meeting with at least 25 basis points. Since higher inflation numbers increase this likelihood, it can increase the euro against its crosses as well. Number 3. Canadian GDP. Unlike the United States and many other economies, we expect to see substantial numbers in Canadian GDP report as it benefits from the oil price increase. On the other hand, we know that inflation increasing in Canada same as other economies. Therefore, it will leave the central banks free to raise interest rates by another 50 basis points at Wednesday's meeting. The Canadian dollar should gain some strength over its competitors. Number 4. U.S. consumer confidence. Moreover, this super busy Tuesday will end with the Conference Board's consumer confidence number in the United States. Increasing inflation and pessimistic outlook about the war fate in Ukraine will be the main reasons to put more pressure on consumer feelings. Market participants are waiting to see more weakness in the United States consumer feelings. These numbers means that the Federal Reserve will be more cautious in its hawkish policies. Therefore, USD is expected to weaken. Number 5. OPEC Plus meeting. OPEC Joint Ministerial Monetary Committee meeting will be held with the representative from the 13 OPEC members and 11 other leading oil producers on Wednesday and Thursday. We are not expecting any changes in the current production plan, which would be positive for the oil prices and will stop the bears even if it cannot increase the prices. Number 6. BoC meeting. June will start with the Bank of Canada's monetary policy meeting on Wednesday. Canadian inflation is 6.8%, the highest rate since January 1991. The labor market has fully recovered from the pandemic and GDP is positive unlike many other economies. Therefore, we expect another 50 basis point rate hike to increase the Bank of Canada's prime rate to 1.5%. And finally, number 7, U.S. labor market data. We had strong job creation in April, despite some weakness seen in the last week's initial jobless claims numbers. Therefore, we are waiting to see positive numbers in Friday's non-farm payroll report and unemployment rate at 3.5%. Furthermore, average early earnings will raise by 0.4% in May. Overall data should be positive, and after weakness in the first days of the week in the US dollar index, we can see some bulls again in the DXY chart and bears in the leading Wall Street index charts. Thanks for watching this video and hope it's going to be an amazing week for you.